So with that, Kaylin, let's start it off. Given we're fast approaching year end, what should be top of mind for our clients?
Yeah, Holly, we say this every year, but it is so hard to believe that we're already in Q4 and halfway through October. And every year around this time, our Bartlett team begins reviewing a year-end checklist to make sure that we're ending the year on a strong note and positioning our clients for success in the year ahead. And this year's been no different, but the introduction of the One Big Beautiful Bill Act, or OB3 as I'll call it, has left us with no shortage of things to think about. So all of these things that I've mentioned are top of mind, along with, as I'm sure you can imagine, so many more.
Let's start with those year end topics. What are the key action items that should be on everyone's year end checklist?
Yeah, so I'll start with a few of the ones that are most time sensitive. So always a fun reminder, tax is a good place to start. If you filed an extension for your 2024 personal income taxes, that deadline is tomorrow, October 15th. And even though 2024 income tax returns are just now wrapping up for some folks, we're already looking ahead to put the finishing touches on tax-related items that need to be wrapped up by December 31st, 2025, so end of this year. One of the most important action items is your required minimum distributions, or RMDs. If you're subject to RMDs or from your IRA or inherited IRA accounts managed by Bartlett, our team will be reviewing your accounts to make sure that you're on track to meet these required amounts before year end. The penalties for missing these distributions can be steep, up to 50% of the undistributed amount plus ordinary income tax. So it's really important for us to make sure that we are taking care of those for you. Folks with inherited IRAs are subject to different rules based on age, type of account, and when the IRA was inherited. If you have outside accounts that should be factored in or have questions about the specifics of your situation, feel free to reach out to a member of your Bartlett team to discuss.
Kaylin, another action item that comes up at the end of the year is giving. What are the major gift related considerations for year end planning?
Yeah, we'll continue with IRAs as a topic, but for those who enjoy supporting charitable causes, qualified charitable distributions, or QCDs, can be an excellent way to meet giving goals. So with a QCD, you send a charitable gift directly from an IRA to a 501c3 charitable organization, and you can actually use them to reduce your required annual distribution amount. So rather than get a tax deduction for your charitable gift, you're able to actually reduce what would otherwise be taxable income. The current annual limit for QCDs is $108,000 per person per year, and that amount is indexed for inflation annually. Remember that inherited IRAs are also eligible for QCDs if you're over age 70 and a half. Now, if you have charitable intent, but you aren't RMD-ed or don't have an IRA, you can also give appreciated stock to charity either directly or via donor advised fund, also known as a DAF. And if you itemize your taxes, contributing appreciated stock to a DAF allows you to deduct up to 30% of your adjusted gross income. For many, what makes sense is for you to bunch contributions in high income tax years and then spread that giving over multiple years. Once a DAF is funded, I like to explain it like a charitable checking account. It's just a separate pot of money that can be used for charitable giving. Outside of giving to charities, year end is also a popular time to gift to family or loved ones. But the strategy for gifting stocks to family members is a bit different than for charitable organizations, given the different tax considerations. So we recommend, again, working with your Bartlett team to determine those best assets to gift to family versus those better suited to gift to charity.
You mentioned the changes in the tax code from the One Big Beautiful Bill Act. What should people be looking out for as they're planning for year end and then looking ahead to taxes in 2026?
Yeah, so a lot of the items that are in OB3 don't formally go into effect until tax year 2026, but there are a couple that are really relevant for us as we think about ending 2025. So OB3 made the current tax rates, which were planned to sunset on 12/31/25, permanent, or as permanent as tax law can be, and maintain the higher lifetime estate and gift exclusion of $15 million per person. One thing that I'll call out, though, is that while the federal exclusion remains high, Some states, like Illinois, have lower lifetime estate and gift tax exclusions that may require some extra estate planning. The state and local tax deduction, or SALT, is also increasing effective 2025 from $10,000 per year to $40,000 per year, but begins to phase out at $500,000 per year of income. This deduction is slated to revert back to $10,000 in 2030. I'll also mention just briefly that there are some more complex rule changes that will go into effect in 2026, like a floor on charitable giving deductions and changes to 401(k) contributions for high earners. If you have questions about these changes or how they might affect you, again, feel free to reach out to a member of your Bartlett team to discuss in more detail.
Any final thoughts on planning topics as we look forward to year end?
One final thought, one that I think is really important to highlight, is this core thought that risk management is really central to our investment and financial planning process here at Bartlett. And it's especially relevant to us now after 3 strong years in equity markets. Our investment advisors and financial planners work together to craft a plan that manages risk. And one of the best ways that we can do that is by ensuring your portfolios are in line with asset allocation targets while also balancing realized capital gains with an individual's tax profile. These long-term gains are taxed at more favorable rates than other types of income like dividends, interest, or wages, but we still recognize that it's never fun to pay taxes. With that said, we're still reminded of our role as risk manager and the importance of rebalancing to or close to portfolio targets. As we look to rebalance portfolios at year end, the team will also work to ensure that we have enough cash for known distributions for the upcoming year, like those RMDs that we mentioned at the beginning.
Great. Thank you, Kailyn. This is certainly a robust, very quick hit checklist of all the things we need to be looking out for as we head into year end. And I have no doubt there will be a lot more conversations coming out of today's dialogue. So